In this video, guys, let's talk about what we do when a flag is at resistance. Stay tuned. Hey guys, warm welcome to you. All right, so trading a bull flag, bear flag, very good trading strategies. One of my favorite trading strategies. Part in there, talk about grading the trade, talk about all this other stuff. It's one of the big favorite ones in the momentum ignition category of trading setups. However, just for you YouTube guys out there, what do we do if we're trading the flag and it's at resistance? Now, under normal circumstances, this is kind of a little bit of a red flag. It's like, okay, be a little bit careful with it, and we've got some rules for that. Now, let's think about, because this is happening quite a lot at the moment. I was looking at some charts the other day, I was thinking, great setup, but it's at resistance. All right, let me look at the bigger picture here and think, how should I be trading these? How should I be kind of quantifying these? How much size should I be putting into these deals? So when we isolate the flag here, so we've got to isolate this flag and we've got this, the classical flag pattern, it's all looking good. We've had the drive off lows, and especially if we have an earnings drive as well, great. Comes to a high point, fine, but we've got this overhang of resistance. So what do we do? Now, under normal circumstances, we've got to be a little bit cautious, because if we're buying in here, we're kind of buying, hoping the price will break through. However, let's just take a step back, as I always like to do, and look at what's caused this move, and also look to see what other pressures we have that could cause this to pop. So if that's caused by earnings, great, got a tick in the box. If we've got, this is a stock, say, we've got other underlying, I've got the other broader market pushing higher as well. So it's a tech stock, Nasdaq's pushing higher, or it's a banking stock, the sector's pushing higher. If we've got that pressure as well, then this becomes a little bit more of a different challenge to us, because we can say, actually, you know what, if we can preempt this, if we can consider that the pressure from the sector, the pressure from the earnings is going to overcome anything, then you could still take this and get a little bit more juice from the deal as it breaks through this significant resistance. Now, normally you're going to be cautious about buying before resistance, because price might stall there, it might back off a little bit, you maybe want to be careful. But when you've got this circumstance, I think as long as you can quantify your risk, whether you've got a stop below the pole, whether you've got a stop below the flag, sorry, whether you've got halfway down the pole, however you decide to quantify that risk, I think that if you can then get momentum, very quickly this can run on and give you 3x, 4x on the trade. And so it comes to a point where you go, right, what are the bigger, broader things that are helping this push more aggressively? Like the broader market, like the sector, like dollar strength, dollar weakness, whatever it may be, if it's a commodity, etc. Okay, great. Is there anything else? Maybe earnings, maybe there's some sort of NFP data, maybe, is there something else? Great, fine. Okay, if you've got a lot more weight on it, then I don't think there's any reason not to take the trade. As long as you quantify your risk, as long as you accept the fact that, hey, I could get stopped out, because I think the risk-reward ratio, when you have got that additional weight helping things to push through, more than make up for it. Because if it does push through, you're ahead of the game. You aren't chasing this up into here waiting for a pullback to it. You are in, and you can start selling and scaling out the position into a lot of those buyers, those stop losses from sellers and buyers jumping in over that key resistance level. Now, you've got to have some kind of caution there and go, right, well, if it kind of sits there and flags and just kind of nudges along, the momentum's run out. Because don't forget, it's a momentum type trade. We've got the momentum here from the pole. We're pushing up. The flag is the pause, the calm, the waiting, the key, the kind of catching the breath, and then we're back on the throttle again. And if that lacks, if it starts to do this and just kind of drift and accept at that level, and we don't really see it pushing through, maybe you want some kind of time criteria where you exit the trade. 3 days, I'm out of the trade. 4 days, I'm out of the trade, in that sort of scenario. So, normally be careful of this. If the market's in a range bound condition, generally you wouldn't take this. If you've got a good strong market, in this example, we're in the uptrend, a good reason for extra pressure, then as long as you've got the risk managed, guys, any trade can be taken. Any trade can be kind of put on the books, as long as you know, hey, here's my risk on the deal. I'm not going to go crazy into it, but the risk reward potential has suddenly got more because I think we're going to springboard through. So maybe the probability of success is quite low. So I don't need to go into it now, but if we have a higher risk reward ratio, Yes, these may not happen as often as we'd like, but that risk-reward ratio more than makes up for it. All right, guys, that's what to do, or what I believe you should do. You guys can let me know your thoughts in the comment section below. How do you trade this type of very specific chart pattern when a flag is at resistance? Take care, keep your risk managed. Don't forget to check out our channel sponsor, guys. A link in the description below and all the other good stuff there. If not, subscribe to the channel. YouTube's free. Take care. Bye-bye.